So we'll actually pull a graphic up on the screen to explain that, because it can be quite hard to understand. And so effectively what we're saying on the left-hand side, the before, is if you've got a loan of 500,
that's right,
and you pay it all off and then withdraw it, nothing's going to happen. Whereas this way, by putting the money into an offset,
that's
effectively
right,
your net loan is zero, so you're not paying any interest.
No interest.
But as soon as you then withdraw it, and on the right-hand side we're saying if you then take 400 out in cash to buy your new home, which obviously isn't going to be tax deductible,
no,
on that investment property, you've still got a net loan of 400, and so all of
that's
that
right,
interest.
and the interest will be tax deductible because it is on an existing property already drawn, and the property is a rental property, so you're advantaged immediately.
Yeah, so certainly if the viewers didn't pick that up, and it can be complicated, either watch the reruns at 11 o'clock and Sunday at
or give us a call.
2 and 6, or give Chakra a call, or obviously your mortgage broker, to try and explain
Absolutely.
the reasons for doing that.
Yes.
Now, whenever there's advantages, there's always disadvantages again. Sometimes there's a higher expense having these offset accounts, isn't there?
There is. Usually you get about 0.25% or 0.3%, but that's minimal compared to the benefits you're going to get, because once you take the cash, the excess cash, and put it against on the deposit side, then your net interest that you actually pay is lower anyway, so you're making savings at that point. And then when you come and buy the next property and you go and occupy it and you get a tax deduction at the next end, then that is even more benefit. So it's benefits all around, really. I just feel it's a good way to go.
Yeah, and certainly for some people, they might think, look, I'm never going to leave the country, I'm not going to go overseas, but putting money into an offset account rather than paying it off your loan, if you pay it off your loan and, say for instance, you lose your job, the bank aren't going to lend you any more money because
exactly
you've lost
right.
your job.
That's
Whereas
exactly
if it's in your offset, you can take that out in cash whenever you want.
That's exactly right. And of course, right around, what you have situations is, I have people always asking me, look, we've started out with a small house, we maybe received an inheritance, or we've paid most of the mortgage off. The kids are growing up and I need a bigger house. So what they do is they've paid the loan off, and now they're borrowing again, secured by the old house to buy the new one. What happens is, because you're buying the new one and the new one is a private expenditure, you're not going to be allowed a tax deduction. And I have people crying at my office when I keep telling them that. So it's best to start off with an offset type loan all the time.
Again, get the advice before you start.
Absolutely, advice is critical, always in front.
Yep. Now, advice on the selling side, Doug. When do people realise it's the right time to sell the house? Is there ever the perfect time, and does it really depend on their circumstances, or should they try and time the market and autumn, summer, spring?
No, I mean, forget trying to second guess the market. I think it really depends on the individual and their circumstances, more to the point. It could well be that they are looking for a certain catchment area of school, they want to get their kid into that school, and thus obviously that will dictate their timescales. So I don't think there's a right and a wrong time. It's whatever suits the individual.
Because again, if the market is kind of cooling off, or it's just kind of flattening out, then people say, oh, I'm not going to get a record price for my house. But most people are generally upgrading their house anyway.
Mm-hmm, yeah.
So if it's a quieter time, surely that's a better time to actually get out. You might not get as much for your property, but you can negotiate harder on your next purchase.
Absolutely, and it fascinates me how we're preoccupied with house prices. You're absolutely right in what you say, Chris, in regards to it swings and roundabouts. You know, most people that are buying and selling are doing so within a similar price range. So to an extent, it's an irrelevance. What perhaps more comes into play is the cost of money, the cost of borrowing at that moment in time.
Because it's a pretty hard thing to pick the market, because in my areas, say the eastern suburbs, then January and February were ridiculously strong, and then literally overnight on the 1st of March it seemed to be suddenly it was cooling off. Does it generally happen that quick? Did it happen that quick in your area, or is it generally over a longer period of time?
In our area it tended to be over a longer period of time, but I did hear about the tap being turned off in the eastern suburbs, so it can be quite dramatic, but as I said, it depends on the suburb itself.
Yeah, and look, it's never going to be perfect situations of being able to sell in a boom, buy in a bargain, have low interest rates, have high rents.
It never happens.
The stars are never aligned, are
No,
they?
that's right. That's very true.
And certainly when it comes to buying, is that the general rules as well, that look, you're never going to be able to time the market, it's never going to be perfect, so just if you've got the cash, buy it.
Absolutely. Look, I mean, there's a lot of luck involved with timing, but I would say, look, if it feels right, do it.
Yeah. And your thoughts?
Look, my thoughts is, again, a lot of my clients are involved in a journey to create wealth through a property. So they're quite educated, and it helps if people can educate themselves on the swings and so forth. And there are rules of thumb that the agents usually know, particularly with maybe auctions and so forth. So if they can play to the basic rules, they should get up in front. There's no promises, but usually the better educated you are, you get a better feel for the market. If you're in it all the time, you're looking at numbers, you should be able to make a better purchase.
And it's interesting the way you talk about your clients, saying it is a journey.
It is a journey.
Because it's not just an instance, right, I'm going to make some money.
No.
It's over a long period of time.
Well, property is a long-term type investment, and you won't, by the time you pay stamp duty, and if you sell, you've got to pay capital gains tax, and in between you've got losses and so forth. It really is not a long time at all. You've got to be in there a long time before the value develops, and before you get over all these expenses that are in the middle in order to come. And people want to create wealth, so they want more than one property. And it takes them a lifetime to develop that. By that stage, they've got enough to retire on, or at least have time on their hands. They don't have to work if they don't want to.
Yeah. And Doug, it was interesting to hear that you're a renter as well. A lot of the viewers are surprised when I say I rent, that I buy lots of little properties and I go and rent the big one. Are you renting kind of recently coming from the UK, or that's your lifestyle choice as well?
No, it's my philosophy, if you like, very much like yourself. I am also an investor, but I just like the fact it gives me freedom of movement. So, look, I make money on property, or at least most of the time, but I just like the fact that I can move suburb to suburb at free will almost.
Yeah, I was just speaking down in Adelaide this week, and again, when we take a break through the seminars, then I say to people, well, if I have so much property and I choose to rent, why would I ever want to do it? And people are so stumped, like they just can't believe it, because they always think it's the less wealthy people that want to rent.
Yeah.
But expensive houses actually rent for about a third of the price of the little ones.
It's very traditional thinking as well, and I think there's a bit of a change in the paradigm going on almost at the moment.
Yeah. And certainly if you don't own your own home, then all your debt's tax deductible, isn't it, if it's all on investments?
Chris, what we usually see at the office is that the larger properties have a slower rate of return most of the time, and the lower priced properties have a higher rate of return. So it's an advantage if you're renting to live in the place, you get a lot more value.
Yeah. Now we're going to take a short break, but we'll be back in just a minute, so don't go away. Welcome back to the show. The experts are here to answer your questions about what's happening in the property market. So give us a call on 1300 30 34 35. Now, we've been showing you a few properties this evening in Sydney's western suburbs, and we'll move back to a slightly more affordable one again, and we'll be looking at Blacktown. We'll pull some pictures up. Do you want to give us an idea of what you've got in Blacktown?
Yeah, I mean, it's a very atypical property, if you like. It's a single-storey dwelling. It's on a guide price of office advice between $320 and $350. Yet the rental income is $360 a week. Now, obviously, varying on the purchase price itself, that could range from maybe 5.3 to 5.9% on a rental yield. So again, a very handsome return, I would say.
Yep, no, wonderful. And certainly, again, it looks pretty affordable. And to get roughly 5.3 to 5.9% return, then that's pretty good, isn't it?
Absolutely. Look, it's clean, it's tidy, it's easy maintenance. As far as investors are concerned, that's exactly what you want. Ticks all the boxes.
Yeah, that sounds good. Now we'll jump to the phone lines. We've got Patrick from Penrith on the phone. Welcome, Patrick.